I get this question all the time from a founder. Hey, how do I know if my startup's working, right? And each of them has raised different amounts of money, et cetera, the different runways. The real answer is this. If you're working on problems that are addressing your afternoon of the same day or tomorrow, you're working very hard to get out of the bind you're in. If you're focusing on problems that you can deal with next week, next month, you're doing better. Next quarter, next year, you're doing great, okay? And so it's literally think about the forward view, and the further forward you can begin to plan and execute, the better you're doing as a company.
Hello, everyone, and welcome to Built Not Born, the startup go-to-market podcast by Venture Guides. I'm Sage Nye, and around here, we believe that great companies are built, not born, one smart decision at a time. Each week, we take you through real conversations with founders, investors, and go-to-market experts on what it really takes to land customers and scale your startup. Now, let's get to work. Hello, and welcome to Built Not Born, the startup go-to-market podcast by Venture Guides. I'm your host, Sage Nye, and around here, we believe that great companies aren't born, they're built, one smart decision at a time. Today, I'm joined by someone who embodies that philosophy better than anyone. Ben Nye, Managing Director at Partner Guides. Ben's been an operator, a CEO, a 6-times Midas List investor, and is now leading Venture Guides, a firm focused on driving best-in-class returns for both our customers and our founders. In this episode, we're talking about the new Venture Guides Fund, which we just announced, why it matters, what makes it different from traditional VC, and what Ben and the Venture Guides team is looking for in the next generation of technical founders. We'll also dig into some of the macro trends shaping software in 2025 and beyond, and how founders can get ahead of the curve. If you're building a startup right now, or thinking about raising from a fund that rolls up its sleeves, this episode is going to give you an insider's view. Ben, welcome to Built Not Born.
Thank you, Sage. Good morning.
So let's dive in. Venture Guides just closed its second fund, which is a huge milestone. It was oversubscribed and opened and closed within 8 weeks. There was clearly a lot of interest and momentum in raising this fund and continuing to drive Venture Guides' focus on early-stage infrastructure software startups. So I'd love to start with 2 questions. The first one is, why start Venture Guides?
Great. Well, thank you. Look, Venture Guides is something I've been thinking about for a long time. My first job after college, I was a salmon fly fishing guide in Alaska. And the reason one hires a guide is to get a better yield and a better experience. And honestly, I think there was an opportunity in venture capital investing to do just that. What's missing in venture is the guiding, right? We love building companies here. It's one of our passions. And so what we did is we structured Fund 1 to say, let's be concentrated in our number of positions, 15 positions, to arrange and allow more time for guiding. But if you're going to do that, you really need to underwrite those investments. You need to get to know the founders. You need to understand the space. So we had a domain focus of infrastructure software, which is one of the most critical things. Therefore, we could be concentrated and intentional. But then to underwrite that, we also asked the partners to write significant personal checks. And so in our case, 10% of Fund 1, by the way, 11% of Fund 2, which is even larger fund, but the contribution from the general partners, and it makes an enormous difference in how we approach our portfolio companies. If you have 15 positions, highly concentrated, intentional investing and so forth, then what you know is, why do you own something? Okay, how do you improve it? And what to do in terms of growing its value. And that's what we're super excited about.
That's really exciting. And why raise a second fund now?
Well, the first one went so well. I think the initial strategy and team and execution was all working quite well. And so what happened was we got to the annual investor meeting and people said, hey, when are you going to raise your next round? And we'd be interested in participating or even doubling or tripling in some cases. And so there was a lot of interest in that. From a macro standpoint, we also thought it's a really good time. And I'll tell you why. Right now, the markets are in a little bit of turmoil. There's a lot of uncertainty. There's no IPOs happening of relevance. There's very much of a crowded market up in the growth equity realm, where many of the historically large venture firms grew larger and larger, and ultimately are competing in growth equity with the traditional growth equity firms. And frankly, with the high cost of debt leverage now, a lot of the PE firms are coming down into that same growth equity market. Whereas underserved of late has been the venture community. And I think the opportunity right now for pricing coming in a little bit and the opportunity to launch really interesting companies, innovative companies of tomorrow's technology is right now. You have a renaissance going on in chips. You have an unbelievable change in opportunity in the way people think about the expansion of data, the utilization of data, data masking data. There's just so many things that we can do to build really interesting companies right now and get them ready for when the markets and the IPO window is back open.
Makes a lot of sense. You've been both an operator and an investor prior to Venture Guides. How has that shaped the way that you thought about building this firm and starting Venture Guides?
Well, I do think it helps. If you want to provide that guiding expertise, it helps to have lived the role. So one of the things we did is when we built the team out here, we hired only people who had been both investors and operators. It does help to walk in the shoes or have walked in the shoes of the entrepreneur and the founder to understand, how do you build a go-to-market machine? What are the opportunities for pricing and packaging? What are the core people that you need to recruit and in what order? Those are so many of the things that honestly, young companies make an error in consistently. And candidly, it can cost them a lot in terms of a thin balance sheet company. And so our belief is that experience can be hugely helpful to first-time founders. But candidly, we also have in our fund a couple of four-time founders. And they're the ones who say, nobody does what you guys do. So I think it's been really appreciated by the founders and the CEOs.
And I'd love to double click as a CEO, as a former CEO yourself, when you think about the advisors and the investors that you really held in your guides and your close circle, were there specific traits or specific things that you looked for from those advisors?
Yeah. So we had a lot of board members and some really terrific people. But the ones who really distinguished themselves were the ones that took the time to understand our domain, understood the company and where we were at in our growth trajectory, and then offered help in context. And I think that context piece really matters. People are always willing to help, but they don't always know how to help. They don't have the skills to help. My goal in building this team was to find people who had the capability, the experience, but also the appetite and willingness to dedicate their time to really helping the entrepreneurs at critical points in their own development of their companies.
Fantastic. When we think about now that you're an investor and you get to work with founders all the time, what are the traits or specific things that you look for in a founder in a young company?
So one of the things I love most about venture investing is finding leaders. And I could write a book on leadership. It's so much. I will not write a book, by the way, but I could write a book in terms of how much it captivates me. Seeing people in difficult situations, trying to scrape through a hard quarter or whatever, and having that resiliency, sense of self, accountability to hold themselves before their teams accountable. I love people that understand the importance of a customer-led mission. We want to serve the customer first. We want to take care of the team, and we'll do ourselves third. Okay. And if you take customer team self as your mindset, not just in venture, but in life, boy, it's great. It keeps your ego in check. It keeps you humble, hungry, focused, and you build great teams as a result. So I would encourage everybody to think that through. When you look for a really good founder, it's a high sense of self in a humble way, right? With the customer mission orientation, and then obviously resiliency, because not every day is an easy day.
Yep, makes sense. In terms of signing up those customers and adding those customers that you can serve, one of the things that we see frequently is the challenge of shifting from founder-led sales to a go-to-market engine or a machine that's predictable and forecastable. Do you have any advice for founders in terms of what to focus on and how to think about that during the transition?
Yeah, this is whether you're talking about companies like Rapid7, SolarWinds, Dynatrace, and others. We've been building go-to-market machines for a long, long time. And I think it's one of our calling cards here at Venture Guides. What I would say is you want to start with really treasuring the ICP. Make sure you know who that is and make sure you know what their realities are. There is a person behind the ideal customer profile. And they have a reality in the organization in which they live. They have mandates. They have triggers. You need to understand them well. When you get past that level of what I would call intimacy, then you can start to try and scale. But the biggest mistake people do is they try and go right into scaling. They don't know who to hire. They don't do the background checks. They bring on people that are not oriented towards the serving customers. And then you try and teach those people, and it's really hard to go from that initial wonderful and intimate design partner or early customer, and then all of a sudden it doesn't scale, and that's where a lot of them miss. They take their eye off the ball. They've stopped serving the customer, and they've stopped thinking about the customer 24/7. It's fixable. It's always fixable, but it needs that maniacal mindset.
And that question of scaling is a great point. As a founder, there is no template. And so it can be hard to know if you're on the right track or on the wrong track, and it's hard to measure that. How do you think about beginning to identify that you're on the right track?
So I get this question all the time from a founder. Hey, how do I know if my startup's working, right? And each of them has raised different amounts of money, et cetera, the different runways. The real answer is this. If you're working on problems that are addressing your afternoon of the same day or tomorrow, you're working very hard to get out of the bind you're in. If you're focusing on problems that you can deal with next week, next month, you're doing better. Next quarter, next year, you're doing great. Okay. And so it's literally think about the forward view, and the further forward you can begin to plan and execute, the better you're doing as a company.
Got it. Markets can create a lot of noise. And another question that we frequently hear from founders is, how do I know if my solution is the right one for the market?
Well, first of all, you'll see demand. But I think the hardest thing I find is when an entrepreneur has built a product and says, go find me some customers, wrong orientation. The real thing is to think about who is that customer, what are their realities, and how can I serve them? And then let's build the product organization. Let's build the marketing organization, pricing and packaging, et cetera. Let's build the messaging. Let's build the sales organization, all in service of that customer, and great things happen.
Do you have any examples from your time at Turbonomic of making decisions or maintaining decisions in service of the customer?
Yeah, too many. There's 10 years in there. I'll give you a quick example. One of the things, you tell people to focus on the customer, they all say, well, we do focus on the customer. We think about this all the time. But our corporate colors at Turbonomic were green. And one of the things I asked marketing people in the side meetings around a customer advisory board, which is one of my favorite meetings every year. But one of the things we would ask them is, okay, when do you know when you're supplementing your own opinion for the customer? And I said, I'll give you a quick question. What should the corporate corporate colors of our company be? And everyone knew to say green. And the answer was, well, wrong answer. And they said, oh, well, should it be green or red, I guess? And they said, well, then red. And I said, no, wrong answer. And the only right answer was, I've talked to 19 customers and 18 of them said magenta, and the other color is magenta. And the point of the story was really to try and get people to understand you need to solicit the customer's feedback as opposed to inserting your own opinions. And that's a big piece of what we're trying to do, is focus maniacally on serving that customer, who they are, what their realities are, use quotes, and it makes a huge difference in the accountability of an opinion.
I'm sensing a theme to this episode. Customer, customer, customer.
It's all about customer.
So I'd love to shift gears a little bit. We have a couple questions that we've got from founders in terms of startup execution and growing teams.
Okay.
The first one is, if you had to land your first 10 customers from scratch, how would you go about it?
Oh, I think it's very similar to what we said. First, before you even built your product, you want to go out there and talk to those customers that you think you're going to be serving and really understand their daily reality. They have a boss, they have an organization, they have mandates. There's all kinds of things going on with changes in leadership all the way through events in the news. And they have to be thinking about, how am I going to make my customer, my organization address any of those different trends, and what are the top priorities? So you need to understand the ICP in a traditional sense, but also in an organizational context, and understand the mandates and triggers. From there, you can then begin to design what you think the solution will look like. But again, it's really important how you ask those questions. You're not selling that person, you're learning from that person. So you're actually trying to solicit a no as much as a yes, because if you're just going to run over them, you're obviating the value of that interview. From there, you're going to eventually get to something where you say, okay, here's an idea. What do you think? Get the feedback, particularly on how it fits into the daily work life of that person or persona. And then ultimately, what you're really trying to do is make sure that that product is extensible, understood, and then you can start to guess, what's the value of this product and this, more importantly, this solution to this customer organization. And then you can extrapolate beyond what the market opportunity is. Do this work up front, because you got to do it before you get too far down, or you're building a foundation on sand, which will not last.
Makes a lot of sense. The next question is, as you're thinking about hiring a go-to-market leader, do you have any red flag traits that absolutely crush a candidate?
This won't surprise you, Sage. Yes, when you sit down with a go-to-market leader, if they only talk about themselves, that is a huge red flag. They should be focusing on their customer. Who is their favorite customer? And what did they do to serve that customer? And if they can't recall immediately, that's a big red flag. The next one, though, is they should talk about their team. They should talk about the development of the team, the best recruits on their team, the people that had a wonderful customer story of their own. And if you can't cite those, then honestly, they're probably too self-centric to truly lead. and they should, in my mind, put themselves third. We're hiring people into a customer mission company. And if they can't understand and focus on the customer, then I think it's not going to be as successful a relationship. And more than likely, it'll be one that moves on transitionally.
Makes a lot of sense. When you think about building a high accountability culture, do you have any advice for founders on how they can implement that without getting into micromanagement?
Lead by example, right? What you want to do is you want to set the right priorities. So again, customer, team, self, repeat them all the time. It's how we run Venture Guides. It's on all the walls and all the documents we produce. We talk about our principles, practices, and priorities, but customer mission is absolutely one of those. The other thing though is own things, right? And what I mean by that is, leaders lead and victims blame. When you lead and you own and you're fully accountable and you demonstrate that behavior in front of all of your employees and so forth, others will emulate. And they'll understand implicitly that it's okay to make a mistake. What's not okay is to blame. So what we want to do is pull together as a team and execute at a higher level than any one person could do on their own. And so I think the importance of leadership over victim, I think the importance of demonstrating accountability and ownership of both good and bad, and then sharing credit is obviously part of the journey and the fun. You do that and great things happen. The fundamental bet here at Venture Guides, and I think we did this at Turbonomic, I think we did it at BCV, is that when you have a strong team, well organized, it will outperform the individual 10 out of 10 times.
Great. The next one is actually more on the fundraising side. When a founder or CEO has multiple term sheets, is the best option always the highest price?
The best option is rarely the highest price. It's possible, but most of the time there's a pretty strong potential for an adverse selection process if you're just basing your decision on price. For an early stage company. Later stage, it becomes more of a price estimation. When you go public, it's absolutely that. We've taken 5 companies public in our past. But I think early on, what you really want is a thought partner. The CEO job and the founder job is a hard job. And not everybody can give you an answer. They talk about lonely. I don't know if it's lonely, but it's just who's got the perspective of the shoes in which you're sitting. And so you really are trying to build context around it. And if you have a thought partner who understands the domain, who can look across multiple companies, bring a different perspective, and help you advise on people issues, recruiting issues, needs, who can look into the future and help you expand your horizon. Those things are critical. And again, someone who just competes on price will not be that partner. As a matter of fact, when I say adverse selection, I'll tell you that the real issue is if they're not involved in your business and you spend the money poorly, all of that preference will sit above your equity, making it harder to raise the next round because the risk of a down round is usually pretty distracting to an organization. And it could be a very, very long and arduous road that was unnecessary had you picked the right partners along the way. So pick your partner is my number one thing, not price.
Got it. As we're wrapping up, I have 2 more questions for you. The first one is, what was one of your favorite memories or favorite learnings from Fund 1?
Oh, you know what? I think our very first investor meeting, we raised in a time where it was a very difficult market. I think we were the only new fund manager of scale at the time we did this. This is January of 2023. The fundraising market was the worst in a generation, literally according to some close friends that are in that market all the time. And the first annual investor meeting was sort of a test of, hey, are you going to be able to pull off what you said you thought you could pull off? And, no operator knows that with certainty. But the number of people who showed up at that first meeting who believed was really impressive. We had about 2/3 of our investor base show up for a first annual investor meeting ever. That's rare. And they were there to review and inspect as much as they were there to support and congratulate. It was really special. I think it was only superseded even more so by the second annual investor meeting where they said, hey, we like how your strategy is working. We see the differentiation. You're really bringing back classic venture where it's investing and guiding. And so they said, we would love to increase our exposure to Venture Guides in the second fund. When do you think you'll raise? And that led to a discussion where we said, okay, well, I'll tell you what, we're going to be a little bit early, but let's get a dry close open. And so this second fund is now raised. It was raised just like the first one in 8 weeks in a very difficult climate with a lot of uncertainty, a lot of volatility. And again, I can't applaud enough the strong investor base we have. And just to give you an idea, I won't name names, but these are some of the most incredible brand name investors at incredible top tier firms, family offices, names you know, very high profile. And now also, by the way, in the second fund, our first institutional investors as well. So super exciting, super humbling, and boy, are we happy to serve those people.
And as you look forward to Fund 2, what are you most excited about?
I think this can be a great time in venture. I think pricing is coming in further. Liquidity is coming in further. I think the importance of having somebody that actually understands your domain and helps you build your business is happening. I'll give you a quick example. We're here at 100 Causeway Street in downtown Boston, right next to the TD Garden of the world champion Celtics. And one of the things that we have is 10, on a purely volunteer basis, 10 of our 11 core position companies have chosen to co-locate with us on the ninth floor. That's really exciting. That means that you no longer have, periodic access once a month, once a quarter, but rather daily interactions with the teams, with the founders, with the CEOs. And I think the execution has improved across this portfolio of companies. We have had 106% annual ARR growth. And again, strong gross margins, strong business models, great hiring. We even started our own sales academy, VG Sales, to be in market all the time and to recruit from the 44 schools of higher education in the Boston area. We put them through a lot of background training. As a matter of fact, one of the neatest things is we can find these young SDR candidates and so forth. We put them through background reference checks in a way that companies typically don't have the time to do. We then know that we have the right people. We put them through a 6-week training course. And literally by the time they go to the companies, the desks on which they're going to work, they've already positioned the technology and set meetings. That's pretty cool. It's about a 3 to 6 month accelerator for those companies. When they move up and they're about to become an AE, we have AE Masterclass. So we bring them back through the VG Sales Academy and they can go get the understanding of what is it to carry a quota? How is it to serve a customer? How good is your messaging and so forth? And that remedial class is really, really valuable. And it's all about making sure that we're growing these companies as rapidly as we can in a capital constrained manner and do so with strong efficacy. The VG Sales Academy experience has been so strong. We're actually adding right now VG Marketing and the interactivity between marketing and sales. They're co-locating, but we're doing this together. And also VG Talent Team. So it's really fun. We're having a ball doing it. And I encourage anybody interested, listening to your podcast, come visit us and you'll see these are young companies truly building tomorrow's technologies.
Very exciting. Well, Ben, thank you.
Thank you.
And thank you for joining us on Built Not Born, the podcast where we break down the real stories of startup execution. If you enjoyed this conversation with Ben Nye, be sure to subscribe and leave a review. And if you're a founder or someone who'd like to join the VG Sales or VG Marketing teams, and you're looking for guidance on how to scale your startup or how to get into the startup ecosystem, check out ventureguides.com. Thank you very much, and let's get to work.
Thank you, Sage.
Built Not Born, the Startup Go-to-Market podcast, is brought to you by Venture Guides. To find out more about Venture Guides and how our Venture Capital Plus guiding model helps early-stage startups build scalable go-to-market strategies and grow faster, visit ventureguides.com. And then make sure to search for Built Not Born in Apple Podcasts, Spotify, YouTube Podcasts, or anywhere else that you listen. Hit subscribe so you don't miss any future episodes, and we look forward to building with you. On behalf of the team here at Venture Guides, thanks for listening. Until next time, keep building.